Welcome to the MapleMoney Show, the podcast that helps Canadians improve their personal finances to create lasting financial freedom. Ever thought about buying a second house or condo so you can rent it out? Meghan Chomut is a CFP that specializes in helping people that are buying an income property as part of their portfolio. We compare them to REITs, or real estate investment trusts, discuss the tax advantages of having this type of business, and how you can get started if you think this is right for you. You can find Meghan at meghanchomut.com. That's meghanchomut.com. Our sponsor, Borrowell, has a new and improved recommendation engine that's stronger than ever. Get your free credit score at maplemoney.com/Borrowell, and then go to your recommendations tab to see personalized product recommendations of credit cards, mortgages, and loans from trusted partners that's tailored to you. Now let's chat with Meghan. Hi, Meghan. Thanks for being on the MapleMoney Show.
Thank you so much, Tom, for having me. I'm really excited to be here.
I'm glad to have you on here. For those that don't know you, you are a CFP that works with property owners. So I wanted to have you on to kind of walk us through that, because I don't know a lot about this. So I want to kind of just discuss it and see what this actually is. So can you tell us a bit with rental properties? How are they part of your portfolio?
So personally, they're part of my portfolio in that they give my family some cash flow. So it gives us the intention of the cash flow was originally supposed to be long-term in terms of providing us with long-term retirement savings and the cash flow at retirement so that we could fund I live in Northern Canada. So we wanted to fund our snowbird lifestyle, hopefully. And so that was the intention of it being held in our portfolio. It was there, but the intention was not to think about it in terms of selling or benefiting from it for the next 20 years or so.
Okay.
But things change, just like everything. When we bought it, we were young. We were just starting our family. And then as we started our families, our priorities kind of changed a little bit. And a couple of years ago, we started using some of the cash flow to supplement our income because I started my own business. So we had to kind of think, is it a component of our portfolio that's still long-term? And would it benefit to maybe sell it and invest it differently, that proceeds from the property? And when I put on my CFP hat, I found that the numbers made sense to keep it. But sometimes your emotions get the best of you. And we know that it was originally supposed to be there long term. It's pivoted momentarily. We're slowly making it more of a long-term portion of our portfolio now. And because owning an income property is not like they make it look like on TV, where you get the keys, it's exciting, and then you get to decorate or paint the walls or renovate as a couple, and it's fun. So sometimes having that CFP hat to switch on every once in a while is a big benefit, because when you get the phone call at midnight that your basement of your rental property is flooding, that's your responsibility.
That's what I was thinking when you said it's not like the dream on TV. I was a renter once, and we had those kind of issues, not flooding, but things like, the washer's broken and we need it like fixed right away. And the guy we were renting off at the time, he had to come at different hours, crazy hours, and deal with that. And that leads me to where I wanted to go next. Was personally, any sort of real estate investing I do is through REITs. Can you kind of compare the difference between investing in a REIT and just investing in an actual property? You kind of touched on the downside of crazy times, but I assume there's extra money to be made there.
Well, and it's funny too, because like I mentioned the thing of flooding, but like when you own the property, you are essentially buying a business. So it's different. It's the same industry, a REIT and a income property. Same, it's real estate.
Yeah.
But when you buy the building, you're actually taking care of all the bookkeeping, the customer service, the maintenance man, the landscaper, everything. And like you mentioned, the washer needs to be fixed, or I said the flooding. But like, there's little life things happening. Like they lost their keys, like things that we all do that take time and energy, not so much a lot of money to replace a set of keys, but it's like having a part-time job when you're owning this real estate. Whereas a REIT is something you buy, you hold it, you watch the price fluctuate, and that's pretty much where your responsibility ends.
Yeah.
You don't have to file taxes. You don't have to track the expenses. You don't have to chase tenants when their check bounces or when they forget to e-transfer you the rent. So it kind of depends on what your comfort level is. If you have always had a little bit of an entrepreneurial desire, maybe owning the actual property would be a good experience.
Mm-hmm.
But if you're in a stage of life or you don't have any interest in managing people, because that's what it is, it's a lot of customer service.
Yeah.
And all the bookkeeping and accounting side of things as well, then owning the property wouldn't make sense. But if you're interested in real estate, then absolutely look into REITs.
Yeah. Okay. Now, I don't know. We kind of started off making it sound like there's a lot of downsides. What are the upsides to this? I assume there's a better potential financial upside, like with a REIT. Not only are you paying just the normal expense ratios if you're doing an ETF on them or anything like that, but then the REIT company itself is also taking more than their fair share, I'm sure, as well. So is there a lot more financial upside to owning your own place then?
You know what? I don't know if I would really compare them like apples to apples, just because of the nature of the investment themselves, especially because you can hold REITs in various different accounts in terms of sheltering them from certain things and all those things. But there are benefits to owning income properties in that you essentially own, property that you could use for maybe your own personal use later on in life, or your legacy, maybe your children or, other dependents. And you have other people essentially paying off the property for you in exchange for you buying smart and investing the time and the knowledge into everything that comes into owning the property. But in terms of benefits, like we've experienced a lot of great benefits in that we've had great tenants. I mean, I don't want to,
that helps.
I'm knocking on wood here, but like we've met some amazing people that have never would have entered our lives otherwise. We've also gotten the experience to be entrepreneurs together, my husband and I, and learning all about that kind of dynamic. So I'm more of the tenant finder and the ad maker and all that things. And he is the maintenance man. So there was, when we go and look at an income property potential, he will come with me, or I will make notes when I go and look at it. If the numbers make sense, I'm all in. Whereas he will say, that bathroom will take years off my life. I'm not doing it. No. So just those kinds of things are great benefits. They're like life benefits instead of just like monetary. And then the flexibility we've had. So we originally bought the property for funding our retirement.
Mm-hmm.
And we, when we had our third child, one of the options I wanted us to consider was me not going back to work full time. And in terms of the numbers making sense, it made sense for us to maybe either postpone that retirement or make some wiggle room in terms of our finances. And that property helped us get through that runway of baby turning, because we're in Canada, baby turning 1 and going back, maternity benefits are over, to what's my next step. So it allowed me to have that breathing room where I didn't have to stress about how much money we had coming in the family house.
So one of the other benefits I was thinking of, there must be some tax advantages to this. Can you shed some light on that?
In terms of tax benefits, it's almost like you're two entities. So for example, let's say me and my husband make income, like T4 income, like normal employment income, or even self-employed income. That's one entity. The other entity is the rental property. So the only tax benefit there is on the rental property. So you're able to, whatever you're making in rent, you're able to deduct the expenses against what you're making in rent. But so you could essentially make that negative. You could say this property costs our family more to run it than we make from it, which reduces our income and our taxable amount. However, if you keep doing that year after year after year, the government will say, wait a minute, why are you keeping this rental property if year after year after year you're taking a huge hit? This doesn't make any sense. And so you have to strike that balance of, claiming expenses that are appropriate. And also there's an expense called depreciation, which essentially will allow you to, even without a negative cash flow, it will allow you to make your taxes look like that property had a negative, it'll bring it to zero, that you didn't make any money on it. But other than that depreciation, that's really your only option to kind of reduce it and not get a red flag on you. Yeah.
Is the I guess second mortgage on this, is that considered an investment loan? It's tax deductible?
So you're able to deduct the interest.
Okay.
And same with, let's say if you bought a property and it required a little bit of work to get you, to get it livable, or to, maybe you didn't have the cash to replace a furnace or do some sort of landscaping thing and had to take out either a line of credit or maybe put it on a credit card, that interest also is deductible.
So it's truly, like you said earlier, it's a business. I assume this is probably the T2125, not that you necessarily remember tax forms, but where you put in all your income and expenses and see how it affects your
No, it's super, super similar to that. It's called the T776.
Oh, okay.
Did I say 3 7s? It's 3 7s and a 6. And it's very similar where they're very clear on what qualifies as income. They're also very clear if you live on the property, what percentage of the property is it.
Okay.
And then they list out the expenses that you can claim.
Yeah.
So if you have an income property, taxes really it's very clear on what they will allow as an expense. But they pretty much allow everything.
So if someone decides this is right for them,
Mhm.
I guess the big question is, how do they get started?
Okay, that's my favorite question, because I think that there is like a culture, especially on TV, about getting started, and they make it look so fun and easy. And it is a lot of fun actually in moments. Like I was saying when we first started talking about, there are stressful times, and it is like having a part-time job, but it is a lot of fun, and you feel a lot of pride when you drive by your property, or when
Yeah.
you do your income taxes and you see that you made money. Like, it feels really good. So what I say when people want to get started is, if you were to buy a rental property, what would be the intention for it? So would it be something that you would kind of hold on to and sell right away, or is it long term? Do you want to buy one so you can keep buying more? Like, what is the ambition behind it? Because that ambition is going to be your anchor, because there are going to be, especially if you're buying with somebody like a spouse, there are going to be moments where you're not going to agree on keeping it,
Yeah.
or getting rid of it. So, especially when when a maintenance issue comes up, and I think it's easy, but I really don't know, like, and my husband doesn't want to do it.
Yeah.
So I would say, what is the thing that's anchoring you to it? And can your personal finances sustain that investment? So unlike mutual fund or EFT, if you want out, it's not as easy.
You can't just sell it that day. Yeah.
You cannot sell it that day. And there's that's somebody's home now.
Yeah.
So it's a little bit more complicated. And there are a lot of expenses that people kind of forget to account for when they try to find a profitable property. And one of the things that a lot of people forget to include is vacancy. Mm-hmm. So what I say is, like, can your personal finances hold like the debt? Can you afford to do the down payment required? And let's say, for example, that property has to sit vacant for 3 months. Mm-hmm. Can your family sustain that? Like, is that something that's going to cause you a lot of stress or financial turbulence? Because if it is, maybe just wait, keep looking, keep doing analysis, and keep trying to find that perfect property. Because owning the property, like I said, is like a part-time job. So it's stressful enough as you start to get comfortable and start to learn the ropes. The last thing you want is the financial stress as well.
Mm-hmm. That the idea of vacancy is kind of one of the scarier thoughts for me. When we lived in a townhouse, we owned our townhouse, but the lady beside us was renting. She rented that place for 30 years and more beyond that by the time we had moved. Like, what a perfect tenant where they're moving.
Yeah.
They're pretty much there your entire mortgage length. But the idea of going a few months without a tenant would kind of drive me crazy, I think, compared to
absolutely
just always having somebody to pay for it.
And it's one of those things where, when you are in that vacancy period, mm-hmm. you don't want to feel rushed to find a tenant, because it's better to find the perfect tenant. Like, I want that old lady who's going to be there for 30 years.
Yeah.
As opposed to feeling heavy and like rushy and picking somebody who's not going to pay, or who's only going to be there for 6 months, or who's going to who knows what. Mm-hmm. So you really want to be clear-headed when you're doing your screening, because just like, you don't want that added responsibility of going through the process again, in addition to maybe evicting somebody.
Yeah, I bet. Do you have a couple tips on sort of how to find a good tenant then? Because it seems like that's kind of one of the bigger risks out there, assuming you've bought a place at a decent price.
Mm-hmm.
Then the only other thing is really a keeping tenants. So how do you find a good one compared to all the other options out there?
I know. And I have been super lucky. And I think that it's a combination of doing your due diligence, but also trusting your gut.
Mm-hmm.
So what we've done in the past is I'm the only one who screens the tenants. So I'm the only one who books the appointments, meets with them, shows them the apartment. Mm-hmm. And my husband has nothing to do with it. And I think it helps too, because we're from a small town and he is more social, maybe is the right word, but he knows a lot more people and a lot more people know him. So renting to friends and family really can, not even friends and family, but just people that know you through connections, sometimes can backfire. So I think having a neutral party do your screening is helpful. One thing that I like to do is I just like to Google them, put your listing out there, see who responds, and just type their names in, see what comes up, because most likely they have social media, and their social media pictures are an accurate reflection of the kind of things that they like to do.
And that's why people need to watch what they put on social media.
Yeah. So, and so what I do is I book all my viewings on the same day. I try to, so that they're 15 minutes apart, one right after another. And when I'm meeting with the people, I have done my background checks in terms of there's Google and the internet. And then I just treat them like people. So I don't treat them like, when they come and see the place, I don't have any real ulterior motive. I'm just one person to another. Could we be friends? Do I feel like the communication we had over email or text messaging, however they booked their appointment, felt comfortable to me? Because that's going to be the biggest thing, is the communication between myself and the tenant. And if they took, days to respond to me, that might not be the best tenant. Mm-hmm. And then when they come and I'm meeting them and I'm just getting to know them, showing them the place, I just see if they are respectful of the space. Did they take their shoes off? Did they throw their cigarette on the ground when they walked in?
Yeah.
Just little things. And I think trusting your gut too. I know a lot of people say it's better to separate business from kind of those types of decisions. But I feel like trusting your gut is important, because you're in this relationship with this person, hopefully for a long time. And you need to like them and they need to like you.
Yeah, it's great. It's a great point. It seems like if you find the right person, then that would take a lot of my fears out of this. So can you let everyone know where they can find you? Yes,
I have a website. My website is MeghanChomut.com. And I also have a Facebook page, and it's the same. You can just search me, Meghan Chomut CFP, and my page will show up. And I post a lot of resources about, what numbers to look at. And I think an important thing when you're first getting started is to talk to other people who are about 10 steps ahead of you. So I always compare it to, if you're having trouble getting your baby to sleep, if you're a parent and your baby won't sleep, you're going to ask another parent whose child is maybe a year older than yours.
Yeah.
So I don't want advice about putting my baby to sleep from someone who's never had kids or tells me how they get their dog to sleep through the night. And the same thing goes for sometimes rental properties. If you're interested in it, don't ask your aunt. Don't ask your neighbor down the street who has no experience in real estate. Find people who have a property and are about 10 steps ahead of you.
Yeah, for sure. That's good business advice in general. I've always found like if you can talk to someone that's just a little bit ahead of you, then that's normally the best place to get the information. Mm-hmm. So thanks for coming on the show.
Thanks so much for having me.
Thank you for listening, and thanks again to Meghan for her insight on investing in income properties. You can find show notes for this episode at MapleMoney.com/Meghan Chomut. If you like the show, please share it with a friend. Even more awesome, head over to MapleMoney.com/show and find your favorite episode. Share that on Facebook or Twitter and let everyone know.